Hi, Warriors. China's not happy. China's not going to sit still. China can endure more hardship than Americans. How you guys doing today, Michael, AJ, Ryan Varghese, hello, and Bran? Yes, I have. I'm as crazy as the market. You're right, buddy. James came in. How are you? I think Ryan's under the weather. Will Wishart, welcome to Face. How are you, buddy? Hi, AJ, Blake, Marcus. Oh, Ryan is here. Okay, he's a trooper. All right.
Of course, mate. Of course, I'm here.
Well, because I tuned in. I was up early. I tuned into the Flow Show.
Yeah, I'm
And
suffering a bit. But,
yeah,
you know,
okay. All right. Well, uh, you're tough. I have a philosophy that if I'm not really not feeling good physically, I try not to trade.
yeah.
But I've heard people say then I'd never trade because they never feel well. So at least the market is a distraction for them. So anyway, so Trump has now talked to Xi and Google China. Okay, I don't know. I think it was more China than their earnings. So my point is, out of the Mag 7, you've had some shakeups in Apple, right? You've had shakeups now in Google. You've had shakeups in Microsoft. You've had a shakeup in NVIDIA. So that's 4 of the 7. Okay, so that puts more weight on Amazon trying to keep it together. And of course, Meta, which, has been a monster. So I find it interesting. They're taking them out one at a time to execute them. What would you say about that, Ryan? The Mag 7 were the darlings. I think they carried us a good portion of the way. Everyone talks about the concentration that we've had during this bull market. Now there's some broadening out, but can the market do it without the Mag 7?
Yeah, of course it can. Because if tech is going to pop, then you're going to get rotation into more stable stocks, shall we say?
Okay.
So yeah, they are out on their own, and of course they drive indices generally. But yeah, if the market doesn't like one thing, it goes hops out that frying pan into another one, doesn't it? It's like Frogger.
Yeah. Yeah. Cash is illegal. So
Trump coin. They go to Trump
right.
coin.
Trump or I'm sitting not in cash but in fart coins until I see something. And how about
Stinky
this
asset.
break? How about this breakdown in yen? It looks kind of serious. Like a big descending triangle. I thought last week we were going to get a run towards 57, and that didn't happen. But that's looking pretty vulnerable here. Um, maybe the next stop's down here. What do you
Yeah.
think? Or you think we'll make a stand? 52's big, man. Look, we talked about
52 is big.
52, I
Yeah.
don't for a year,
Yeah.
right? So
52
that
was big on the way up. Yeah.
yeah,
When we were
yeah,
coming up first time, it's going to be big. It's the 155. It's the 157. It's that sort of level.
okay.
Um, we're
Yeah,
holding a 61.8 fib, I think, of that move from December. Bang on the nose.
okay.
So that's
This
where that
one,
low is.
this rally.
Yeah.
Okay, from
That
here to
low.
here.
Yeah.
And at major support. So probably I mean I can't I mean if you're going to launch short, you just have to be wrong over today's high, right?
Yeah. At
If
that
you
break
believe
point.
yeah, if you believe that there's a leg like, 8, to take it down towards
So
these lows.
Let me
probably a
ask you a
ton.
question then, Dale. If you wake up in the morning and you see the dollar yen doing that, what do you think's broken?
I would think that there'd be risk off and yields would be lower.
Yeah.
But
Now look at the 10-year
yeah, same. Yeah.
under that
So
450.
yeah, so that correlation is still intact even in the new regime.
Yeah.
So
Part of it,
for
good
go ahead.
data from Japan as well has helped it earlier on in Asia. Strong wages. That's got the market pulling forward the next rate hike to May from sort of June, July. So
Yeah.
it's got two winds blowing at the moment. Strong Japan data and that yield breakdown.
Okay. This is going to be the next important level. You know, 434 was a big level uh, on the way up and on the way down. I mean, so between there and 4.25, which is a measured move, right? Called this, you know, uh, 30. Yeah, take you down to here, this, 425. But that 434 level, it was this high all the way back here that contained it before a correction. So kind of a pivot here, broke down from that pivot, got back above it. So that's a big pivot, this 434 range. So that's the next support level that I see. Um, unless you're really bullish bonds and stuff, and you think this is just going to roll over and we're on our way sharply lower. Are you in that camp?
Not with the US data the way it is, and with the Fed the way it is.
Okay.
So it's going to have to be something else that drives. That'll be a safe haven move more than anything else, and
Yeah.
which is possible, with everything that Mr. Trump is doing and getting up to.
Yeah, you mean a risk-off move would take us a lot lower.
Yeah, I mean this move today smacks of risk off. Bonds bid, gold up, Swissy bid,
Yeah,
yen bid.
yeah,
It's old
yeah.
fashioned risk off.
Okay. So, you have to really respect this move in the dollar from where we were Sunday night. Failing rally to me now. I mean, we're probably looking at the potential of an outside week to the downside. So, I think 105 is the next target in this, but this is an ugly week, especially if we take out last week's lows. So here's the 105 level. Look left, 4.5 or 5 right here. So this could happen fast. I mean, this happened fast, didn't it? I mean, it was really about 2.5 months to get this move out of here. So I know Jim thinks it's going to take, I think, till the fall to get down to 95. May happen faster than that. Um, okay. Any comment on the commodity currencies? Aussie putting in a reversal week. Looks like that was it.
Yeah, it's
So I don't know how to get on board. If I didn't do anything Sunday or Monday, it's tough to get on board now. You feel like you're chasing things.
we're still all in downtrends. Aussie dollar, euro dollar, cable. They're
Yeah,
still in their wider downtrends from the end of the year. This is a strong bounce. Obviously, you're looking at that weekly candle there in Aussie. Strong bounce there, but we're not yet knocking out any of the decent levels. Cable, all right, stretching its legs, but the
yeah.
38.2 fib of the 134 move is at 126, so we've still got a way to go.
Okay. But this one really is a performer. I mean, it took out all the highs from last week where, Euro hasn't even gotten close to it and Aussie has. But anyway, that's pretty strong performance in cable. I'd
Yeah.
buy pullbacks. I don't think I'd want to short it. But I'd buy pullbacks to 24 now if it happened.
Yeah, I think dip buying in a lot of these pairs is the way forward at the moment. But just make sure you pick your points, because all it takes is a headline and you're blown out again. So 124.5, that was the solid level. We gapped below it, we came back up to it, held it. Now we've broken it, trying to make support around 24.60, 70. So that's your risk level. Take a dip into 24.50, but if you're under 24.30, then things are going wrong again.
Well, a lot of valuticians were saying that this pullback that we had, even though it was deep in euro, was a 2, right? This was 1, and this some type of correction for 2, and this begins 3. So 3 is normally a fib extension of 1. So it's a money wave. It's the biggest wave. So we could be in 3 now. We could be getting ready to do something like that from here. Possibility.
Yeah.
And Trump gets what he wants. A weaker dollar. He may have get more than he wants.
Yeah, be careful what you wish for.
Yeah. So let's bring Kay. Kay, man, how are you today?
Hi, coach. Hello,
Hey,
everybody.
bro. Hey, bro. So, what's top of mind for you
Yeah, well,
today?
I said in the room, and I think I said it on maybe not in so many words on the flow show. I think we have a tradable top in, or at least intermediate tradable top in the dollar in place.
Okay.
We are still probably partially undoing dollar longs that because the people were long dollars, but
Yeah.
no, I think it's always fast when you get out of positions. It's always faster than when you build on positions. But we need to look at how those tariffs, if they're getting pushed back, and I don't know exactly how to react towards Chinese tariffs, but if they're getting pushed back, at least for another, we may be in a bit of a lower dollar for an extra 3 weeks, unless Trump says like, oh, delaying tariffs was only a joke. They are not doing enough around the 15th of February, and then he comes like, oh, you're gonna pay 25% anyway. I mean that's always possible. Headlines are always possible. But
Yeah.
it does look like we are seeing at least a pretty decent setback in the dollar, and yeah, I'm sort of positioned that way right now, but also still a bit positive risk as well. So yeah, I mean, somewhere a bit of a mix of both. I must say. Um,
Okay.
Hey
yeah,
guys, I hate to
breaking
interrupt.
the market.
Go ahead.
We have ADP non-farm coming out in
90
literally
seconds,
less than a minute here.
Grab him, Blake.
105 seconds.
105 seconds is that where we're at. I will here in a second. Sorry, Dale. I was just
That's
I
cool.
just forgot that we had ADP.
No, it's important.
Yeah, it's a big move. But you guys can continue your conversation. I'll just show you guys the charts while you guys are talking. So go ahead, Kay and Dale.
Well, I think hmm, I'm tempted to say that the data that we are now getting is still pre-tariff. So I don't know if we are going to get more than an algo blip. And I've been saying earlier this week is that the data that we get that were taken prior to the tariff saga are probably creating opportunities to do something rather than creating new trends.
Okay. Yeah, there was a late sell-off in Bitcoin yesterday. The market didn't react to it. Weren't we down like 3, 4 grand at one point yesterday? I was wondering what was going on. The market was higher. Um, I don't know what to do with Bitcoin here.
I don't know either.
The clearest thing to me is I thought we had that top in the dollar at 110 on that first break. And after today, the break we had this week after trying to blow out dollar bears on the
Mm.
tariff news, I'm pretty convinced we're embarking into at least a pretty good corrective downside move
Yeah, I agree.
in the dollar.
And you know what a lot of people are expecting? They're expecting labor data to start to weaken. And with ADP, remember, this is private data. And it should be, yeah, it's good. Maybe this will hold up a little bit on all the job losses we're going to be taking with DOGE, right?
Yeah.
So, you know, this is private sector data, not, you know, it's going to be opposite well, not opposite, but it's not going to be the BLS stuff. So
I'm
anyway,
trying to make some
go ahead.
money so I could buy a timeshare in Gaza.
That's, you know, it's funny. Michael W has been asking if there's any good realtors. Anybody know a good realtor in Gaza because of what
It's unbelievable.
I know we were talking about that in the chat room. Hey, Dale, I know Steve is here, and Steve, I think you saw that Lucas in the chat room was asking you a question about Doge. Did you see that question that he asked?
I think I did, yes.
Okay, and did you want to address that here? I think you were mentioning you might address it here.
In general, I had said.
Steve, I'm sorry. Can I ask the question real quick?
Of course.
Or I'm gonna, just so everybody knows what the context is here. Lucas in our chat room, and here I'll just go ahead and pull this up. For those of you guys that don't know the chat room, this is the question that Lucas was asking. He was asking, after the election, Steve mentioned that he expected the US dollar to weaken, partially because he believed DOGE wouldn't be able to cut government expenses, given that public sector would be more challenging than the private sector, which I agree. Now, since we've seen DOGE's initial moves, do you still hold the same view, or is anything in the numbers or approach led him to reconsider any points? So that was the question, just so everybody understands the context of what Steve wants to is going to address here. So, Steve, the floor is yours.
I haven't changed my mind, mate. They seem to be very active in DOGE, but if you notice the expenses they've been pinpointing and cutting at the moment, yes, they're all absurd, and I'm sure they're going to find thousands and thousands of instances of absurd spending, the vast majority of which are going to make an impression having to do with the public saying, oh my God, you know, were we really spending money on sending Ed there and doing that and ensuring X and all that? But if you notice, the vast majority of these expenses are literally a drop in the ocean having to do with the total deficit and spending of the US. So although I'm sure they're going to be cutting thousands of different types of spending that indeed need to be cutting, the bulk of the US government spending, unfortunately, is inelastic in the sense that it's either extremely hard to cut or politically dangerous to touch.
Yeah, and so explain politically dangerous.
It's very easy voting against some kind of a handout, giveaway, privilege before it goes into effect. Take as example, Republicans were totally against Obamacare, right? But once it has been voted and people actually have started claiming...
It's hard to take away.
It's extremely hard to take away.
So, and you guys, I was going to say in Greece, this is pretty prevalent where you guys are at, because you have you've shifted so much over the decades to public sector employment, right?
What do you mean? In which direction?
In
we
Greece,
had a lot of public employees.
Yes.
During the financial crisis, we made an effort to reduce that number substantially. But if you ask me, we still have tons and tons of them, a lot more than should be needed in the 21st century with, the ability to do so many things in an automated way and computerized, right?
Right. Okay. All right. Yeah, and that's why I think this is a really important topic because you guys have really witnessed this. And I remember even when you and I first met and we would talk about, government, because you guys were just starting on the cusp of the
Yeah.
European crisis
Yes.
and making all of these what's the proper term? It's so early in the morning here. Austerity measures, right? Taking all these
Yeah.
austerity measures and
Indeed.
so
Although many of them were long overdue and they should have been done long time ago, and if they were implemented, Greece would have never reached the point of almost no return that it did. Right.
yeah. Well, now you guys are thriving. You guys are one of the standouts in the European Union.
Supposedly, yes. Practically, it's extremely easy to show a lot of progress when your starting line is at the bottom of a well, right?
Look at Stelios, Blake. He's in magazines now and
I
all
know
sorts.
he's got his car showcased in magazines. He's
Yeah.
driving around or riding around in yachts. I mean,
He's the main model of Playboy, right?
yeah, right. I mean, Stelios Contigoulas on a yacht. Yada yada yada. Anyway, it's funny stuff. All right. Well, Steve, thank you for addressing that for Lucas in the chat room. I know he appreciates it as well. Hey Dale, look at this dollar Canadian. Now, this is obviously a pretty big move. We're right at the lows of the session right now. Big support. This has been a big false breakout. I've been riding this wave the whole way down, except for like
Nice.
last night's move. But that's a nice little three drive. You
Yeah.
can see it right here. What do you make of
Where?
this?
Oh, I didn't see that. Um, I think that's a little stretched out for your first drive. I think you have one and two. Uh, the last two lows, and I'd wait for a third. That's a little bit stretched out, too far away. And I'd wait for a three now. With this being two, get a bounce and one more low.
Okay. All right. Well, I
And
mean,
I'd
I
relabel
still
it.
look at it as a false breakout. I think it's going to break down. I think we're doing this. It's just a matter of time. I don't know if it's going to happen
Oh yeah,
today necessarily, but it could.
I'm a
I
dollar
mean,
bear, so I mean, and I think I'm gonna be this way for a lot of 25. I've
yeah, me
just,
too.
I've been pretty steadfast about selling dollar strength for a few weeks now, 3 weeks. So, anyway, just use, bounces in Canada to sell.
Yeah, and we were having this conversation in the chat room with K-Man and I
That's a big
about
trick.
the dollar yen and just being short the dollar and matter of fact I want to talk to since K-Man's here. You guys were asleep in Asia and then the dollar yen broke down. Can you guys explain what you saw in the Japanese or what Japan saw that really pushed the pair below that support, whether it's K-Man or Ryan, whoever wants to address that. But it was a pretty big breakdown last night.
Yeah, it was the wages came out much higher than expected, and that's one of the pillars that the Bank of Japan is watching to hike rates. So the expectations, which were rather for a hike to wait for autumn, have been brought forward. We were discussing it on the Flow Show. Maybe March is a tad early because it comes right before the end of the fiscal year. So they may be wanting to wait for May, but the jury is out on that one. They rarely want to stir the pot just before the end of the fiscal year, right? Because there's I mean, Japanese companies, whales, they have a lot to do and to do their bookkeeping and whatever. So may not be March, but May instead of autumn is very possible now. But quite a bit will depend. We should, from mid-February somewhere, we should start to have the indications of what the wage negotiations are going to bring. And that is obviously also going to be one that the Bank of Japan is going to watch extremely carefully to make any decisions.
All right. Well, thank you, K-Man. And I wanted to just, make sure that we illustrate this, that, and obviously if you're using ForexAnalytix, you got this update, about an hour or so ago. We're at a long-term 618 retracement at this 152.50 level. We're getting obviously a nice lift. It's already bounced about 50 pips from there. Following the ADP data. But it's really hard to be short when you're at a long-term 618 retracement. But I do believe that if we get any substantial bounce towards, 153.70, it should find some sellers intraday. And, we've seen a really big move in the dollar the last couple of days. We do have ISM services data that's coming out this morning. So that's going to be a big mover. I think a lot of people are waiting to see, where the ISM lands. I mean, I just saw a video and I haven't watched it. Danielle DiMartino Booth, she's been saying this for 2 years, but she's like, this is the month that labor data is going to start to show some weakness. And I think a lot of people are in that camp. Like I said, she's been thinking about that for years. And I'm sure we'll eventually be right. But at this point, now that we're seeing, DOGE come into effect. You got the Trump administration. A lot of budgets are going to get cut. You're going to start to see labor markets show some signs of weakness. I don't know if it's this month, but I think a lot of people are anticipating that we are going to start seeing labor data weaken substantially. So that's why this ISM data and this week is going to be very, very important. Ryan, we have just a couple of minutes before our show is up here, and Dale's going to take over for his interview. Any final thoughts on this big move that we've seen in the dollar this week? Do you chase it lower? Are you looking to sell rallies? What are you looking? How are you looking to trade this?
Well, I've already tapped dollar yen at 97 for a little short. More so, probably pissed at missing the bounce off the fib at 152.50s.
You just got short here, literally. And guys, if you're in the chat in the trades room, this is the trades room in ForexAnalytix that was obviously put in just a couple of minutes ago. So, all right. Yeah. So that's what you're looking to do.
Yeah, but it's difficult to chase it lower at the moment. So I'm not going to give it a lot of room. That was a pretty solid hold on that fib by all accounts. But keep an eye on US yields. I think if they continue to truck under 4.5%, then dollar yen's going to follow it at the least.
All right. Very good. Steve, I know you're probably not thinking intraday really here, but what are your thoughts longer term into with the dollar, equities, any views you want to give before we wrap things up?
Steve disappeared.
Steve's gone. I think he made me host, but I'll try. There's a possibility.
Steve's not with us anymore, Blake.
Oh, he already left. Oh, dang. He already bowed out. All right. Well, thank you, K-Man. How about you, since we have you here?
Yeah, well,
K-Man just left.
Yeah, I mean,
go ahead, man.
Dale, you should really panic the day I go long euro dollar.
Right.
No, but I've got a little bit of cable. Still got some of my silver running. But 32.5,
nice.
Good level on silver to pay close attention to, even on a longer term basis. Cable I think is intraday somewhere 124.60.75 should hold, and then if it goes lower somewhere in the high 123s probably. But yeah, I think in the short term, looking at those yields, dollar could perhaps give back a little more, and then we go into the what is it, ISM and ISM
NFP Friday, right?
Yeah, not for pussies numbers on Friday.
It sure isn't. Yeah.
What? Hey, this is a family show, please.
I mean, well, it's a family show. A pussy is a very small cat.
Are you talking about cats? You're not talking about cats. You're not talking about cats.
Anyway, he said prissy. Not for prissy people.
He said prissy. Yeah. All right. Real quick before Dale takes over,
we're losing control.
I know, seriously.
Isn't live TV great, man?
Hey, Dale, I used Fanny on my show, so don't worry about it.
I am going to use any type of bounce in the dollar CAD if we see it to just get short. I just want to sell at the underside of this channel. So I mean, I've been shorting it for days and days, and I just would like to see a pop back above 143 to sell a little bit if we can get move back up there. But I don't even know if I'm going to get that today.
We tried to tell Fed guy to wait. He went long Canada before the spike. But I mean he's a long-term guy. And
yeah, I mean he's a long-term guy. I mean,
now he's okay because
hey, you know what? No more Trudeau is going to be not good for U.S. dough. I don't know what that didn't even make any sense. Dale, you have any last minute thoughts before you bring Kirk on?
I think that this was the big test for the narrative of a potential bear market in the dollar. And I think that it proved itself for sure. I guess you can't say for sure. It really reinforced the fact that narrative is in play. I think we're going to 105, to your moving average and breakout. A lot of confluence at 105.
Yeah, I think it's a nice gravestone doji, lower high.
Yeah.
K-Man said, intermediate top in the dollar. I think you just have to lay into it on any type of rally at this point. So hopefully, and let's just hope we get some sort of dollar recovery, following the ISM ahead of the jobs report this week. And then, hopefully the jobs report does show some signs of weakness and we can play into it. So, all right, guys. Well, thanks everybody for being here. Remember to be inside of the Forex Analytics community, seeing what we're trading, what positions we've got going on, what other traders are doing. You can see even, K-Man posting his trades there. I'm putting my trades, what I have open, what I'm closing. If you want to be involved in a really, really nice trading community, try Forex Analytics. It's only $1 for 10 days. So, Dale, I'm going to pass it over to you.
Okay. I hope you feel better, Ryan. Thanks, K-Man.
Thanks, mate.
All right. And thank you, Blake.
Thanks, Coach.
My buddy. And here's another friend of ours, a friend of F.A.C.E.
Good morning.
Kirk, how are you? Kirk Spano at Kirk Spano. Kirk, all right, I got to start off this way. Okay, cool. You brought charts.
Brought charts.
You ended your last appearance pulling up a picture of Kamala Harris, thinking she was going to win. So, all right. So you're wrong about, unless you went to the betting polls, it's more significant than a winning or losing trade. But now that we had a red sweep and Trump 2.0 is here, did your views shift radically as a result of the election? Is it part of your shift in views, or did it reinforce what you were thinking prior? How did the election affect your narratives for 2025?
Well, in all things, I hedge my bets. So I bought a bunch of Trump stocks, in particular, some energy plays and Flagstar Bank and a couple of other things that I thought would do well under President Trump. So I don't know that the narrative has changed all that much for me. And here's why. You see the chart of money supply. I am really big on liquidity, value of the dollar, and the bond market as an indicator of what stocks and commodities will do, and now what Bitcoin will do. So I have 5 charts today and kind of talking about all those things. I think that Trump brings more volatility. I don't think that's particularly prescient to say that. So for traders, if you're superstar traders, man, if you can't make money under Trump, then you probably shouldn't be trading. But the idea that the longer term, and remember, I'm a position trader, I'm not a swing trader. The idea that the longer term has changed very much, I don't think is true. I think that we still have some major fiscal problems that we have to deal with. However, the fiscal problems in the United States aren't as bad as about 98% of the other countries on the planet. You know, you really only have a couple of significant creditor nations, basically the OPEC nations. China is kind of even when you consider their federal balance sheet versus their internal balance sheets. So I have long been a dollar bull because I believe that the U.S. economy is just that strong relative to the rest of the world, that all the natural advantages here, from geography to government to everything else to the military, give us an edge that I don't think will be gone in my lifetime.
Where would you be stepping into the dollar on the long side? You're getting a nice correction in the dollar. So being a dollar bull, this you must be salivating on prices to get long.
So I'm long the dollar via U.S. equities, right? So I don't really trade the dollar all that much. I just because the gains, it's not leveraged enough. If I want to trade the dollar, I got to use either margin or options, and you know, I try not to make the calendar not on my side. I like having the calendar on my side, not working against me. I'm not as brave as the swing traders who make those trades. So for me,
well, I mean, there are some long-term traders with long-term opinions on dollars. There are many ways to do it. Yeah, UUP. I mean, there are a lot of ways to go to skin the cat.
right.
So
UUP, you really can't make much. I mean, in my opinion, you
money.
can't make much money with that.
Well, you just up your size.
Right. Reach out for risk.
Yeah. You know, buy out. Look, I trade the options on SQQQ. That's
Right.
not enough leverage if they're triple bear.
Right. You are probably a lot of fun to go to the bars with and drink because
I used to be.
Me too. Me too. I used to be.
I'm a has-been.
Yeah,
Anyway,
me both.
all right. So tell us what. To me, it looks like you have money supply. If that's M2, heading lower, and it bounced a little bit here in the last couple years, but I mean, it really came off that huge, all that liquidity we had. Where was that after COVID? And
Right.
hasn't really recovered.
Right.
Is that a bullish, or I think that's a bearish sign, isn't it?
I think in the short term it's bearish, correct?
Okay.
At some point we're going to get one of those spike ups in liquidity again, but I don't think it's this year. Maybe it's next year with the new Fed chairman. And if we get a correction this year and an economic slowdown, but right now the economy is strong, hasn't shown really many cracks yet. We saw that the employment numbers got a little bit weaker. So, you know, there are things on the horizon that may have to be dealt with, but I don't see Chairman Powell being particularly preemptive at this point. And I don't know to what extent politics plays in this, but I don't think that the Fed sees things the way I do. You know, I help develop 20 and $30 million real estate projects every year. And, you know, we've been on hold for 18 months, almost 2 years now on a couple of 20 and $30 million real estate projects. And the reason we're on hold is that the interest rates on building loans and on the 5-year notes, and for people who aren't aware, commercial real estate doesn't take a 30-year mortgage, right? It's you get a building loan for a year or two, you build it, and then you get a 5-year note, and every 5 years you have to renew that note or sell the property and let the next guy worry about it. That's why there's a commercial real estate problem right now. And you know, people talk about it being a crisis or being this big bubble that's got to burst. Look, the commercial real estate numbers are a fraction as bad as they were in 2007. So what's going on in commercial real estate right now is a slow grinding turnover of those properties. I was just in San Francisco, looked at 7 bankrupt buildings. Actually, I looked at 6. I couldn't find the 7th one. and I think it's because of where it was. I didn't want to go, but the idea that we have a banking crisis developing because of commercial real estate, the commercial real estate is a pinprick compared to what the residential real estate crisis was in 2008 and 9. So everything that's going on in banking and with real estate is manageable. And that's what they've been doing, stretching things out, spreading their losses over a couple of years. It probably won't lead to more than 2 or 3 little banks getting beat up at this point. I don't see any major problems in the banking sector. I think their stocks are all fully valued. I don't see there's much upside. But what I'm seeing right now is that because I believe that liquidity is the biggest factor in all assets, right? If liquidity is going up, asset prices go up. If liquidity is coming down, asset prices generally flatten or come down. That's why I show these M2 charts, and I got 5 of them. I think, because last time that we talked about the dollar peaking in the short term. And, 3 months later, that's what's happening. I've been calling the area in the 90s on the dollar the millennial dollar. So I think that's where we're going to float around between 90 and 100 for a very long time. When the dollar is getting too strong, it'll be over 100. When the dollar is getting too weak, it'll be under 90. And, we'll just have to deal with those times when they come. I do think the dollar is heading towards 90, barring maybe a spike up for a crisis. But we'll see what the policy is. I think that we are probably going to see some changes in how the equity markets work based on where the dollar goes, right? I mean, the dollar always has a huge impact on equity markets.
Yeah, let me ask you this when it comes to equity markets. I was talking about this morning about how 4 of the 7 Mag 7s have broken trend.
Yep.
So, okay, and that's the first time, first they took out Apple and shot it. Then they took out Nvidia and shot it. Microsoft hadn't made a new high since last July. That's been executed too, and today it's Google. So that's more than half of the Mag 7. I'll pose this question to you. Everyone's saying, well, it's okay because there's broadening out that these stocks are becoming a source of funds to go into other sectors. Do you think that that this broadening out, since these were such a big part of averages advancing the way they did, can the market absorb Mag 7 stocks not acting well and not have a serious correction?
Well, I was going to open with I come with a warning. So last week, I moved from having a very tiny hedge to being almost fully market neutral. I think that the stock market has got problems. I think that the economy is going to show signs of that weakening. And what we know is that when we get a recession or economic slowdown, then generally stocks come back in the short run. Now, I'm not a doomer. I don't see a depression coming or anything like that, but a small recession, I think, could happen. And there's several catalysts for that. One of which you talked about earlier is DOGE. With Musk in there almost unilaterally cutting spending by blocking stuff and firing people, that's negative for the economy in the short run. Now, is it going to work out in the long run? Maybe. I don't know. But in the short run, taking money out of the economy is bad. Now,
well, then tariffs would be then too. What's your take on? I know we've had some drama, but okay, there's DOGE, and that's he's pulling his management style he had when he bought Twitter. He's doing the same thing.
Yeah.
He's just cutting to the bone.
Right.
So
Musk said in November or December, in the short run, there will be some pain to get things done. Now, I'm not going to forecast too much out into the distant future because it won't sound pretty. But I think that in the short run, there will be some pain. And that's why I went market neutral. Remember, I manage OPM. I manage other people's money. In fact, I now manage money for other financial people. So it is incumbent on me to manage risk. And when since I think liquidity is probably the major driver to all equity, commodity, and Bitcoin markets, if I see liquidity tightening up, which is what I see, then I have to lighten up on risk. So I've gone market neutral for the 7th time in 30 years. So I've been market neutral 7 times in 30 years. I am 5-0-1, right? I've won 5 of those bets, and one of them I tied in 2015-16. I tied. So we'll see how this time goes. If we get momentum to the downside, I'm piling on because I know that the traders are going to pile on. And that is something that I think, and I talked about this years ago, with there being twice as many traders now as there was before COVID, the spiral effect, and this is mechanically important to everybody listening. If you're not paying attention, pay attention to this. The spiral effect of traders piling on to trades can be way bigger now, which is why you've seen elevator shafts drops in certain stocks. I think that could come to the S&P 500. So I'm not projecting that it will. However, it could. And I think the risk of an elevator drop on the S&P 500 to like, you know, for sure to 5,000, but maybe well into the 4,000s, it's there. Now, that doesn't mean it will happen. You guys have to monitor that in real time, but it means that it can happen. And the odds of it happening, you know, it always can happen, but the odds of it happening, I think, are much, much higher today and really almost match 2020. So we're not going to have, I mean, hopefully we're not going to have another pandemic, but I think that when you take a look at valuations, when you take a look at the US market relative to the rest of the world, when you take a look at liquidity, when you take a look at some of the government money is no longer going to be going into the economy, and there's a time lag on the new investment into the country from some of these major investors that are coming in. You know, the thing that doesn't get talked about is the offset from small business, which is hamstrung right now. Hamstrung small businesses is always bad for the economy, always 100% correlation. And small businesses aren't growing right now, and that's really, really.
Yeah, they're folding. It doesn't your call for the dollar possibly going to 90. It's not in sync with lower liquidity because a weaker dollar eases financial conditions.
So, like I said, I think that there's probably a likelihood of a spike first, and then it comes down. Okay. When you take a look at the dynamics with Powell, I have a hard, you know, he didn't talk about getting rid of QT the other day. And I think that was important. That's what I told my people was the most important thing to listen for is, does he talk about exiting QT? And he did not. So it looks like we have quantitative tightening until the second half sometime at least. And, you know, that's money unprinting, right? So everybody talks about money printer go burr. The reality is that we've been unprinting money for 2 years, and that's what I don't think people wrap their heads around. QT, quantitative tightening, is unprinting money if QE is printing money. So we'll have to see. You know, one of the things that I think, you know, remember Econ 102, right? That's your macro class. 101 is your first micro class. 102 is your first macro class. Remember the term crowding out?
Yeah.
We've never had to deal with that before. We have $7 trillion of debt coming due in the next 2 years, or this year and next year. $7 trillion. Because Janet Yellen took advantage of short-term rates and did 2-year treasuries for the most part instead of 5s and 10s. So Scott Bessent has to come in and refinance $7 trillion of debt. That is not going to be easy. That's going to continue to have upward pressure on interest rates. So they have to refinance this debt. He's probably going to do more 5s and some 10s because he doesn't have to deal with this again during this administration, right? This is going to be the event. He's going to refinance everything for over the next 2 years to be out of the Trump administration when it comes due again. And they're going to try to set up for a 2-year rally, right, in years 3 and 4 of the administration. Frankly, I think they're going to get it. I think we get some choppiness and a correction now. And you probably ought to buy the hell out of that dip because when they come in with QE, probably next year with the new Fed chairman, and all the shocking transitional things are probably done, and there's a potential for a couple of big upside surprises, I think that I think we get the blow off equity market top into the end of the decade. And here's my longer term forecast. We are at peak baby boomer retirement in about 2030. And that'll be at the same time when a lot of these bonds come due again. I'm much more afraid on a macro level about 5 years out, 5 and 6 years out, than I am over the next year or two. This is a transitionary period, but it won't solve a lot of big problems unless they have the positive surprises. The only way for DOGE to cut, really the only way to cut it anywhere near $1 trillion out of the budget.
Entitlement.
Well, kind of. So you can't really cut entitlements because you'll have a war. But what you can do is you could merge Medicaid, Medicare, and the VA and then expand its use. If you did that and you paid for it with the tariffs or an import tax, frankly, I'm okay with an import tax. All right, I understand it's a little bit regressive, but I also understand it's a competitive world. So a small import tax, Bessent has talked about 2.5%. I could see even making it 4 or 5. Have an import tax to say 4 or 5%. That will raise a couple $100 billion a year. It will dissuade dumping, and then you target the tariffs on the bad actors. That's how I see it should be getting done. But if they merge all the healthcare programs into one healthcare program, have a less intensive, less personally driven method, right? I mean, if you need to qualify for healthcare, why are they making people jump through hoops every single month? It's the dumbest goddamn thing. I mean, if you want waste, go to the Medicaid program, right? And I'm liberal, man, but Medicaid program is broken. So it needs to be done away with. It needs to just be merged into Medicare and to get put and call it Trump Care. Right? If he merges all these programs and calls it Trump Care, I am calling it Trump Care. I think that if they do that, that's a major positive surprise because we know that on the other end of the spectrum, Medicare is one of the most efficient healthcare plans on the planet. And when you add private supplements, you preserve all that choice, all that quality, and everybody has skin in the game. So there's a way to fix healthcare in this country. Will we finally do it? The reason I say there's a potential for a positive surprise is because nobody in my lifetime has had the power base that President Trump has. And at the moment, he's got a majority in the House. So if he went to the Bernie people and said, hey, I'm going to do Medicare for all, and this is how it's going to be structured, it's not free healthcare, but it's going to be an 80-20 plan, and everybody has to have a supplement, and you either get it through your employer, you buy it on the exchange. United Healthcare is happy, which is important because they buy half the government, and Blue Cross is happy because they buy part of the government too. You can fix the healthcare problem, have major fixes in this country, and it makes sense to do it because you have guys like Musk and Ramaswamy running around talking about universal basic income. Well, fix the freaking healthcare system first, right? Yeah. So the other thing that I think is a potential positive surprise, and again, I don't know if they can get these things through Congress, but Trump is the one that's been most likely to be able to do this if he decides to, right? Fixing the healthcare program, you have to call it Trump care because otherwise he doesn't care. But if you call it Trump care, then he might like it. The other thing is, I've long been in favor of putting about a quarter of payroll taxes into the S&P 1500. So Social Security, I think, should be about 25%. And if you remember modern portfolio theory, a 75% U.S. Treasury and 25% S&P 500, S&P 400, and 600 portfolio is probably the best portfolio over time for preserving purchasing power and getting a piece of the growth of the economy. So Trump wants to see the stock market go up, put a quarter of the Social Security receipts into the S&P 1500. And I point out S&P 1500 because you have to be profitable to be in those indexes, right? You can't put money in there in the Russell 2000 because half of those companies are scams. You've got 1,200 companies on the Russell that will never be profitable. So you have to have that profitability. Those three indexes would do it. It couldn't be monkeyed with. And I will warn people right now that what I'm seeing in private equity and private credit, I was very interested in Apollo and KKR yesterday. Folks, there's a crisis. We're I don't know what inning we are. I'd say we're somewhere in the middle of the game on the
private equity.
Yeah. The private credit crisis is going to come. It's coming.
The shadow banking system.
Oh my God!
All right.
I mean, people don't understand what it is, and so they won't see it until it crashes, and then they ask what the hell happened, and then they point fingers.
Yeah, there's I talked to Melody Wright. She gave me a whole list of companies in the shadow banking system that they're already in big trouble. Why don't we wrap it with now that Rand's back on the table? Knowing President Trump's personality, that he believes they have attempted to assassinate him, and him and Netanyahu look like I'm going to buy a timeshare on Gaza. It sounds like they can't have a nuke. When they were drawing up war plans during his visit, weren't they? For Iran?
I went long oil and gas.
Okay. I mean,
and I haven't done that a lot.
You're one of the guys that said it's been on the table for over a decade. If there's ever a time it could be executed, George Bush, the second Bush, went into Iraq not because of WMDs, but because Saddam had threatened to assassinate his father. That's what I believe.
Saddam was the wall between Iran and Saudi Arabia, and it's good for us to have Iran and Saudi Arabia at each other's teeth because we can play off it.
Yeah.
So give me 2 more minutes. I'll address that, and then I got 3 last charts to show you.
Okay.
I thought it was interesting that suddenly Trump came out and said, "Oh, I'm willing to go back and talk about a nuclear deal with Iran." Kind of sounds like cover to me, but we'll see. All right. Yeah. So this chart shows that the dollar, or not the dollar, but the U.S. equity market has just been on this tear for 2 years now, relative to the rest of the world. I think that South Korea and Brazil are pretty interesting developing opportunities. You got to get past the crisis in Brazil, but you guys ought to be watching Brazil because there's some kick-ass trades there.
Well, the dollar, a bear market in the dollar is going to make emerging markets look good, isn't it?
Absolutely. That's why I'm looking at Brazil and South Korea and a couple others.
I think you like Brazilian women.
I like most women. I'm a 31 flavors of women guy. So
learn Portuguese. Yeah,
right. So here's total market cap in the US divided by money supply. We're at the second most expensive in history. So all the other valuations. I do think that we have to come back to this area. This is commodities. Commodities follow liquidity. So I think in the short term, liquidity goes down, and then I think there's a surge in liquidity a year or two out. So I think there's a trade for you to bet on falling commodity prices, followed by rising commodity prices. And with energy, you have to keep in mind, are we blowing stuff up?
Yeah.
And then the last one is the neat one that everybody wants to talk about. And there's been a number of these charts out there. I found Macro Micro about a month ago around New Year's and kind of loving this website for $20 a month. But the M2
Do
money
you have an affiliate deal with them?
Maybe.
All right.
I don't know.
Go
ahead. Yeah, I mean, I hawk Trading View a little bit, but I don't do a lot of affiliate deals. It's just not worth my time.
I'm kidding you. All right, go ahead, buddy.
Anyway,
just giving you a hard time. Go ahead.
Right. I think I throw an affiliate deal up once in a while. You can go to my Twitter feed, my X Twit. I call it X Twit.
Okay.
So Bitcoin has followed money supply pretty tightly, right? So right now with global M2 kind of flattening out and coming down a little bit, there's pressure on Bitcoin. So all my charts say, and remember, when Bitcoin was about 50,000, I did an interview 3 years ago, and I said, and the guy interviewed, was a big deal out of New York. He said Bitcoin's going to 100,000. I said, yeah, but it's going to go to 20,000 first. And when it got under 20,000, I told everybody back up the truck. An article that went viral over at Seeking Alpha. And so I backed up the truck on Bitcoin at like 16, 17, 18,000. I just recently sold at about 99,000. Not all of it, but most of it. I still have my cold storage, but I dumped my ETFs. And I think that you're probably pretty likely to see Bitcoin, because of liquidity and possibly an event, come down under 80,000, somewhere between 80 and 60,000. I think that's what you guys are targeting too. I think that makes a lot of sense, but without going full maxi on you, and I'm not a Bitcoin maximalist, what I believe about Bitcoin is that it has become digital gold. It's just going to be another part of the international currency system. And what really fortified that for me was about 7-8 months ago, there was rumors, and it seems like it's true, that one of the OPEC countries sold oil to China, and China partially settled in Bitcoin. So it was dollar, renminbi, euro, and Bitcoin is what they sent back. So if Bitcoin is becoming part of the international currency system, similar to the way gold has behaved, because it's hard to transfer gold, right? I think you can see Bitcoin act in that way for partial international settlements, for ease of use so that they don't actually have to transfer gold. I think that somehow Bitcoin, and I don't really fully understand what the numbers are going to be here yet, but and if you watch the show Billions, the things I'm talking about, you should be like, they talked about shit like that in the show. There's going to be some sort of correlation between gold and Bitcoin. And it's kind of like two lines on a chart that are converging. I think that's what's going on. So as strong as gold has been, and I was talking about a gold bull market 5 and 7 years ago, that has happened. I think the bigger bull market will be in Bitcoin. I can't do a mathematical equation that doesn't have Bitcoin at 300,000 or higher. Can't do it. I try and I try and I try. I'm like, where am I wrong? Where am I wrong? Where am I wrong? Bitcoin's going to 300,000. So you're going to want to buy whatever dip you get in the short term, in my opinion.
Mm-hmm. Okay, Kirk. Appreciate it. Looks like you've been right about everything.
No,
what
man.
have you been wrong? What do you? And you know what? I'm going to call you on
First wife wasn't a good one.
I'm going to call you on this. I'm going to push back.
This is the first time I've ever got a presidential election wrong.
No, you had Bitcoin wrong this year. You were talking about it going back to 100,000, and you were wrong when it went to 20. Now you may have
wasn't wrong about when it went to 20. It went to 20. When it was 50,
you didn't think it was going to 20. Back here, you thought it was going to 100, and we went to 20 first. So
yeah, that's the trade I made. When it was 50, I told people it's going to 20.
You were talking 100. You were talking about 100 back then.
It just went to 100
for a year.
We're at 100. Well, I can be wrong for a year because that's my time frame. Okay. No, man, I've hit I made 500% on Bitcoin just now. Yeah, well, my Bitcoin trade was spectacular.
All right. Well, what you were a year early for it, and lots of decay
I don't
during
think
that
so.
year.
I don't think so.
Go back and check out the interview.
I have. I have. I've
All
been
right.
no. So I interviewed what was his name? A guy on the Wall Street Bitcoin thing. I don't forget what they call it. But I said up here, where was it? At the end of 2021, January of 2022, actually, is when I said Bitcoin was going to go to 20, and it did. And in November of 22, I wrote an article on Seeking Alpha that told everybody it was going to 100, and they said I was nuts. And that's what it did since I said it was going.
You were
to
long
100.
for this. You were okay. Anyway, you know, it's good to be right about everything.
I'm not right about everything. I get,
all right,
but I don't
right,
trade short term, because if I traded short term, I'd be wrong half the time.
You even be wrong long term, Kirk, for a year or so before things play out. And all
That's
I
a
hear
pretty
about,
good run.
Yeah. Okay. I remember there was a false start, and you weren't the only one caught.
Take a look at the interviews.
Scaramucci was long and lost his business. That's when the crook got busted in the Bahamas.
Take a look at the interview.
I remember it.
Take a look at the interviews and rank and put them in order. I've done that, actually. I have them on my YouTube page. So I told people to buy down here. I told people to sell over here. I told people to buy over here. Those were my 3 big Bitcoin calls, because I wasn't necessarily a believer in Bitcoin actually until about 2 to 3 years ago. I wasn't sure.
Yeah. Okay.
I think that's fair.
Okay. All right, buddy. So, but what's your, let's get a clear call. What's your call for the market in 2025?
I've said that we just chop around and we basically round trip. And I don't know if it looks like a big frowny face or a big smiley face. I'm not really sure. But I think it's a choppy, flattish year.
Okay. And look,
with risk of a big downside.
Okay. And if the downside holds and it rallies, yeah, I'm looking for the market to go either up or down.
Yeah.
Or sideways.
Could be. Yeah, it could be one of those things.
Yeah, that's what I'm looking for too. So
one of the things that I try to teach my folks is this. Predictions are all well and good, but really all you're doing is laying out scenarios. Your job really is to understand potential scenarios and then react to them.
Yeah, execute. All right, buddy. Thank you, Kirk.
All right, have a good one.
All right. Adios.